Hello, everybody, and welcome to the latest edition of the Sharesify podcast. I'm James Crux, and I'm joined by my colleagues Stephen Frazer and Ian Conway. How are we doing, chaps?
Not so bad. Thanks, James.
Very good, thanks,
Excellent.
James.
So, looking at the FTSE this week, we're sort of down 5%. What's caught your eye, Steve, in terms of the markets?
Interesting. I think he's looking overseas. Really, the FTSE has not really been a big story in my eyes, anyway. The fact that the S&P is largely flat this week might tell you something about where investors are feeling safe. And I think a few weeks ago, big software was coming under a lot of strain because of the threat of perceived threat of AI. Now with all this Middle East conflict stuff going on, I think big software is seen as a bit of a safe haven. I mean, where else is safer than somewhere like a Microsoft, for example? But I guess the really interesting markets have been to our east, the Far East. I've written about it today. The Kospi, the South Korean main index, is down. It's on track to be down about 12% this week, and this is all to do with the oil push. We talked about it briefly on Wednesday. So much of the oil coming through the Middle East and the Straits of Hormuz goes to the Asian economy, and South Korea is about the fourth biggest importer from that part of the world. So when the Straits of Hormuz close down, big issues about cost of living, inflation, all of these things raise their head, and suddenly markets start going a bit squiffy. So yeah, some really interesting dynamics. Ian, what are your thoughts?
Well, Steve, you said in midweek you've learned some new facts about Korea. I learned some as well this week. Apparently, it imported 7 million tons of LNG from Qatar. That's liquid natural gas from Qatar last year. Well, of course, one of the first things to get hit was the liquid natural gas terminal in Qatar. So the Qatari government declared force majeure on the 2nd of March. They shut it. And South Korea apparently, I mean, I'm sure it has more than 9 days of LNG reserves, but its kind of statutory reserve is 9 days. So it's got whatever's in storage and whatever on its way there. So they're having to go into the open market and pay up for LNG. But yeah, the Straits of Hormuz, I mean, 90% of tankers which use it have stopped using it. Partly because insurance companies won't cover them.
Yeah, absolutely.
And if you can't get insurance cover, you can't get finance. You ain't going anywhere.
Exactly.
But thinking about South Korea, recall you mentioned this in the middle of the week. Firms like Samsung and Hynix are massive chip producers, and of course those factories work 24/7. You can't stop them and then cold start them again. They take days, if not weeks, to restart.
And that's what people are worried about. Every hour
hundreds of millions of dollars.
Millions of dollars. Absolutely.
Yeah.
So you can see why investors have got a little bit shaky.
And money's flowing back to the US. So that whole, anywhere but the US trade is kind of undoing itself now. By the way, the background to this is quite interesting because analysts have been cutting their earnings forecasts for S&P 500 for Q1 and Q2. Now, that's not unusual per se, because they tend to be a bit more bearish at the beginning of the year and a bit more bullish at the end of the year, and they start raising forecasts in Q3 and Q4. But where they've been cutting forecasts was energy and healthcare, and they've been raising them in tech. This was before the attack on Iran. So what's going to happen is now they're going to have to go back and look at their energy forecasts, maybe raise them. But maybe if they're worried about the economic ramifications of this, they're going to start reducing their forecasts for other parts of the market. So I'm putting a story out on it later this afternoon. It'll be after lunch, and we will be keeping a very close eye on earnings forecasts for S&P, because of course the index is not cheap. The market's not cheap. It needs to sustain a certain level of earnings growth to keep that valuation.
James, what have you been looking at this week?
Well, there's lots more going on in the investment trust world, Steve. We've done a story on Alliance Witan. It's underperformed for the second year in a row. This is the global kind of multi-manager trust.
This is the two big trusts that came together last year, wasn't it?
October 24, I believe it was. So Witan and Alliance Trust. So a real behemoth of the global sector. But they declared the 59th successive dividend increase. So it's one of those like storied dividend heroes. And then, of course, the other news is Saba is at it again, and it's now targeted Allianz Tech Trust. Which I know is one that you know well. I think you've had lots of conversations with the manager, haven't you, Steve?
I have, yeah. I know Mike Seidenberg quite well, yeah, and he's always been really helpful to us. It's just it seems really bizarre from the outside because this is an investment trust that has consistently smashed its benchmarks. It's
Yeah.
one of the great kind of technology investment. So, I think, in my opinion, I'm a shareholder, right, and it's been an absolute storming success. So what are Saba really after changing? Now, what you can argue is that the discount is a bit
It's,
wider than its
they
average.
can't
I think
surely
the
be
average
saying
is
they're going
around
to
5-6%.
perform
Its
better.
discount at the moment is getting on for 10%. But I mean, that's not something that the managers can control. So changing strategy for the trust will affect performance, but it won't necessarily affect the discount. So it's another trust, I suppose. You might say, should it be an open-ended fund rather than an investment trust? And I've asked Mike this very question, and he said he's always been very comfortable as an investment trust, and he didn't see there to be any particular reason. Maybe he will change his tune. I'll reach out to him and see if I can get an opinion in the future.
Yeah, so it's been included in Saba's new active ETF targeting undervalued trusts. So yeah, so I guess having slipped to a discount, they've seen an opportunity there.
Yeah,
Ian,
yeah.
what else has caught your eye in?
Well, James, we had decent results from Rentokil, didn't we? That recovery story is finally coming through. Investors really like that as well. The shares are up over 10% on the day. Unfortunately, from Rentokil to buzzkill, we had Vistry. Vistry lowered margins and paused its buyback. The stock dropped 25% on Wednesday. It's down, and yeah, it's down another 4% today. So it's taken out its 2020 COVID low. It's at the lowest now since 2012, believe it or not.
So I'm going to guess, Ian, that this is not changing your kind of long-term thesis that house builders run like hell.
No, it's not, Steve. And funnily enough, it was one of the most read stories on our socials. I hadn't realised that Vistry was so pivotal
Right,
to
there you
so many
go.
people.
Moving markets here.
How about that? Taylor Wimpey's down 12% this week. They'd already lowered margin forecasts, but they changed their capital allocation policy to favour dividends over buybacks. And again, investors just don't like that. But I think you've got to feel really sorry for people in surface transforms, which little automotive parts maker makes carbon ceramic brakes.
Yeah, I mean, little being the operative word.
In that sector, them and Brembo. And what I don't think anybody realised was just how big a client General Motors is, because they cancelled their contract, which was due to run till I think 2030. They said they're cancelling it from the end of this month. Well, that's 85% of their sales. Plus, GM had supported them with finance. So the stock dropped 95% on the day. I mean, it's had a bit of a rebound, but you've got to feel for people in that stock.
I mean,
really.
going from market caps of around £1 million to market caps of well over $1 trillion. Broadcom was the standout result from me this week. After hours on Wednesday, it was absolutely knockout results. Really were outperformed on Q4, outperformed on the full year, and guidance up it chalks again. Really well received. 4% the shares bounced on the day. It's getting this reputation of being as crucial pretty much as Nvidia when it comes to the whole kind of data center AI infrastructure. It's becoming a real bedrock share, and really interesting to watch.
So what are we looking forward to next week, James?
Well, there's quite a few interesting ones. We've got Clarkson on Monday, this side of the pond. So that will be interesting. The sort of shipbroking leader. See their comments on what's going on in the world. And then there's some interesting retail names out as well. So Dick's Sporting Goods, who've acquired Foot Locker. So it'll be very interesting to see how that integration process is going. And then Dollar General as well, which is the discounter. What about you? What have you got your eye on?
Dick's Sporting Goods is obviously a good read for JD, because JD has expanded a lot in the US, hasn't it?
Yeah,
absolutely. Yeah.
I'll be watching Balfour Beatty and Costain, the infrastructure guys. I mean, I can't see any nasties coming there. Legal and General, which I put my hand up, PA Holding. Legal and General M&G are coming. Again, I can't imagine there'll be any bad news. And we've got Persimmon, what has been the better performing of the housing stocks, in fairness. And then Genuine Evolution, which one is the old Polypipe, and the other's heating, ventilation, and aircon business. So interesting. I'll be chatting to both those firms as well next week.
On your legal in general, interesting to note. I was reading earlier this week that Goldman Sachs sees the insurance industry in general as actually one of the real beneficiaries down the line of AI, and that sounds like a bit of an outlier viewpoint, because a lot of people have been really worried. A lot of investors have been really worried about the impact of AI and actuaries and insurance and so on. So interesting that Goldman Sachs, obviously one of the bluest of blue chip kind of investment banks, comes out quite supportive of that wider industry. So it might be interesting to see if they've got any commentary around the AI sphere.
Well, Steve, send it over. I'll be keen to read that. And I think we can wrap it up there then, chaps. Look, if you've enjoyed this, please do like and subscribe on various social media, including YouTube. And Steve, do you want to give a pitch as well for next week?
Yeah, I mean, it's worth tuning in next Wednesday, because we've got a special guest, Emma Bird from Winterflood, the market making firm. We're going to be talking extensively about the investment trust environment. I mean, there's so much going on. James touched on some of the issues, investment trust status to OIC status, Saba and all its complaints, the widening discounts, etc., etc. So there's going to be loads of interesting topics. But please send in your questions. We can pitch them to Emma, to editorial@sharesify.com, and any thoughts you have about that wider aspect. I know investment trusts are very, very popular with retail investors, so this is really handing over your opportunity to get involved with the podcast and get us to really engage you. So and that's it from us. I think we better wrap up. So until next week, cheerio.